Hey, good morning, guys. Today I want to cover a little bit more on Bitcoin price action, where we're currently at, what the possibilities would be in the future for going forward for price action. And I want to take a look at a logarithmic view of Bitcoin price action, as well as zooming out to the weekly chart today. There's something in the history of Bitcoin that has never happened before, and that is a break below the 200-week moving average and confirmation. Now, we have actually broken below, but we have never confirmed any move below the 200-week. So we'll take a look at where that is as well, and maybe we can use some of these indicators to clue us in as to where we're going in the next few weeks. But first, let's start here on my daily. My video that was put out yesterday, the robots kind of screwed it up and didn't get it out to all the social media channels. Or when they did, it was mixed in with like 3 other videos. Um, but essentially, I was talking about if you're not a Substack subscriber, you probably didn't see the notification or it got mixed in with others. And I was talking about this $36,000 level, along with a little bit of a, uh, uh, what should I call it, review of past analysis and where I specifically went wrong, not sticking to the basics. It's just like with any sport or anything you do in life, guys. You have you build a fundamental skill, right? That works for you. And in my case, I've been able to chart on TradingView um, just using all the free tools, and I've been able to do a good job of it. And I notice a lot of times when I and I said as much yesterday in my video, so I apologize if you watched that, but I think many of you did not see that. I said as soon as I introduce other variables, outside variables that I'm not familiar with or I'm not used to factoring into my analysis equation, um, then it goes wrong. And one of the variables that I was uh, weighing heavily, or I was depending upon, uh, probably in an, I mean, hindsight is 2020, in an overweighted view, was the illiquidity reports that I was getting from the premium data, subscriber data uh, on Glassnode, on chain analysis. And the feedback I was getting was that illiquidity was at an all-time high, 76, 77%, meaning there's not much room for price action. But that's at least the implication that was received by me. But this right here is with illiquidity at an all-time high. So I learned my lesson. What I do with a technical analysis is what works best. If I start reading the news, start looking at other indicators that may or may not work, start receiving this data and factoring that into my analysis, it just kind of throws me out of whack. So I'm going back to the basics. That's what I'm good at. That's what I'm going to stick with. The other, just reviewing from yesterday, the other question I posed, which I still have not received an answer for, is this really a valid or a legitimate head and shoulders pattern on the daily? It's looking more and more like it is. My pause to trust this head and shoulders pattern, which plays out 85% of the time, a good head and shoulders pattern does, was this small or malformed, not fully formed right shoulder. So I didn't know if that invalidated the head and shoulders pattern to some degree. Like maybe because it's a small right shoulder, instead of going down to our target, of 24, which is the measurement from the top of the head to the neckline, maybe we only go halfway down. Maybe this smaller shoulder is telling us that a move all the way down to the 24,000 is not as likely. So that's kind of the data that I'm trying to extrapolate. I can't find a lot of good study on that. And I haven't experienced a smaller right shoulder often enough to know what the average case scenario plays out like. So I need you guys to pipe in if you have that experience and help me out here. I really don't want to learn from experience because say this thing goes down to 24,000. Um, that's not the way I want to learn. I want to learn from you guys who already have that experience and have that historical data that you can present to me, showing me, look, when you have a small right shoulder, yes, half the time we don't make it all the way to our final target. We only go halfway down. Okay, that would make sense. I just need to see that historically. All right, enough rambling about that. Let's go on because I talked plenty about that in yesterday's video. And let's just do technical analysis again. I'm not going to talk about that glass node bullshit. Didn't seem to make any difference. In fact, it just screwed me up with my analysis, if I'm being honest. No offense to glass node, they're doing what they do. I just can't, I can't factor that into my analysis equation here. It just messes with me. We are at our $36,000 level. And guys, I said yesterday, I want to see 3 candles closing, opening and closing below this black trend line, which I have drawn fairly accurately, but it goes all the way back to, what was it? February, excuse me. October of 2019. That's where it goes all the way back to. All right. Actually, September of 2019. And that's a long time ago. Um, that's over 2 years ago. So if other chartists are drawing a similar trend line, when you're all the way out here on the far end of an extended trend line like this, there's a lot of variable price movement here. I have it drawn as accurately as possible, but it could be that some other chartists have it drawn down here and they look like, might look like we're on support, or somebody else has it drawn up here and they expect us to go down further. And so for these reasons, we can't, say that this is the line in the sand exactly. There's got to be a little bit of fluctuation here, a little bit of room that we give our candles to move. Now, what I would like to see, that's one of the reasons, um, I would like to see 3 candles open and close below that. And the other reason is just that crypto never closes, all right? So we don't have an actual market open, market close in the crypto space. I mean, some countries do, but overall, globally, crypto is open 24/7. So here we are, just under this 36,000. It's almost 36,000 exactly, a little bit under. Um, and we're under that line. And what I need to see us do, otherwise I have I'm going to take out my caution flags, is we need to pop back above this black line. And currently we closed yesterday's candle under it. We opened a new candle under it. Now we have a little bit of bullish action, but it's very lackluster. So I'd like to see us close back above that. Otherwise, if we close today underneath this black line, which today's close is, all right, so if we close at 35,800, I wouldn't be surprised if we close right on that number to really confuse us. We have to wait for tomorrow's candle, which makes sense because tomorrow is when the markets open here in the US, and we're seeing lots of bearish action there, and correlation occurs, between Bitcoin and the broader markets. Let me do something here real quick. I just spotted this. Let me bring down this red trend line because it's looking like we are sitting on that for support as well. And in fact, we are. All right, so that's interesting. Let's keep our eyes on that as well, guys. All right, that's really all I wanted to say about this black trend line. Again, if we close below this and open a new candle tomorrow and close below it, chances are more likely that we head down to that $24,000 marker, which is our target down. And this head and shoulders pattern then becomes legitimate. And I have to have learned it through experience, because so far I haven't received any help anywhere else. And not that you guys would know, but I would appreciate if you did know, if you would pipe in the comments and help all of us out so we don't have to learn the hard way. Uh, all right, enough said about that. All right, so this is our cautionary area. We need to watch the price action and see what happens specifically tomorrow if we don't close back above this today. I have a feeling we won't. I have a feeling we'll go right up to 35,800. And that's probably where we close today, just to really confuse us. Jumping over to our weekly chart, I want to show you something here, and ignore the Fibonacci. That is from the low in March, I believe, to the previous high of 20,000. And I've used this because it has provided us significant levels. Of course, this fib is in reverse, and each of these levels looks to be significant to some degree. All right, and so I just left it there for that. You can see we have a nice M pattern forming on this chart, and that could bring us back down to 30,000. Now, if we go to 30,000, then might as well take it all the way down to 24,000, and you have a true M pattern on the weekly. It's looking more and more like, from what I'm seeing on the, I'm not getting answers from my subscribers, but I'm kind of getting answers from the charts here, that is a legitimate head and shoulders pattern. It's looking more and more like we are going to 24,000 eventually. Now, I suspect that there will be bounces in between, and maybe if you guys are under the impression we go to 24,000, you want to sell into that strength. That's your choice and your strategy. But for now, yeah, I'm seeing more and more indication that we could hit that 24,000 mark, which is really surprising if I was trusting that variable that I've brought to your attention many times before about illiquidity being at an all-time high on exchanges. And I'm glad I'm not going to do that anymore. I'm just going to trust the patterns here instead of throwing in variables that throw me off. All right. So screw that data from Glassnode. And, listen, I recommended Glassnode before. I have nothing against them. It's great data. It comes right from the chain. But technical analysis is where it's at, guys. Let's do a logarithmic view of this. Actually, I'm going to jump over to our Bitcoin all chart here, because that'll give us a clean view. And we'll change it to log. And really, I've never drawn a logarithmic trend line. First thing I see, though, which is interesting, let's do this first before we draw the curves. I see something. Let's take this from here. Trend line, some kind of a trend line here, looks like. Yeah. That's panning out. Oh, that's perfect. Yeah. Right here is the start of our trend line. And take it up there to that touch point. Ooh, interesting. Where does that take us? Right around 24,000, guys. 24,000. Again, the charts are answering my question for me, I guess. All right, let me delete this. What I want to do is draw a curve. There it is. I've never done this before, so you guys are learning with me as usual. Not as usual, I shouldn't say that, but A lot of these things I'm doing on the fly in video, just because I think it helps all of us to do this together. All right, so if we want to draw a supporting curve here, just the way we draw regular trend lines. We got the most touch points looking like that. All right, so let's say that is our bottom curve. Well, let's draw one more for the top. We'll just start right here. We'll end it right around the same place. Let's take the top of this curve and see if we can get all of these touch points. And that looks good there so far. Let's bring this a little bit lower. Interesting. All right. I think that looks good. I could bring this down a little bit. And we could hit those two touch points. And if that was the case, I'm going to have to bring this up a little. That's good. All right, something like that. Anyways, it doesn't have to be perfect. Point of this is I just want to see logarithmically where we're at in between these lines. And look at that. Bottom line is showing around 20,000. So once again, more confirmation, we could come back down and touch this area. Now, the last thing I wanted to show you actually was on the other chart. So interesting, 20,000 again. Again, the charts are showing us 20 to 24,000. That's something I have to really take seriously, guys, because I don't want to. I'm going to delete all this because I want to show you something else. All right, our 200-day moving average, all right, 200-week, I should say. We have never come below the 200-week moving average in the history of Bitcoin. I mean, we've come below it, but we haven't come below it and confirmed it with another week open and close candle. All right, where is our 200-week moving average right now? Sits at right at 20,000. All right, and that would fill this M pattern as well. Wow. All right, so we are all going to have to figure out what to do. Are we going to still play? Because there is, guys, a lot of pumps still taking place in the crypto market. I mean, take a look at this, IOTX. So you can play these longs on the way down to that level and be positioned for long, or are you going to take your positions off the table and go stablecoin or cash until the bulls really show up? Let me know in the comments because I am really interested as to what you guys plan to do. I believe if I went to Coinbase coins, yeah, we have one MCO2 USD, 127% right now. All right, I'm going to get back to providing trade alerts for my subscribers next week again. But I am still interested, guys, in what your take is on that head and shoulders pattern. It is definitely looking like that is a legitimate head and shoulders pattern, and it is playing out. The other thing I want to know is, are you guys moving to stable coins? Are you guys moving to less risky positions? And of course, probably a lot of that answer depends on where we close here. We could see a bounce soon, and we may not. I don't know. I don't know at this point. I think I am starting to turn bearish in my sentiment, judging from what I'm seeing with all the other indicators on the charts, the 2-week, 200-day, doing the logarithmic view, seeing that M pattern, seeing this head and shoulders pattern playing out, being that we're below the 36,000 black ascending trend line. This is all pointing down. So I might be cautious here, guys. We'll catch you on the next update. Take care. Peace.